Uh, Thanks, Aisha. A very good afternoon to everyone. On behalf of Elara Securities, we welcome you all to the Q2 FY21 and H1 FY21 conference call of HPL Electric and Power Limited. I take this opportunity to welcome the management of HPL Electric and Power, represented by Mr. Gautam Seth, Joint Managing Director. We will begin the call with a brief overview by the management, followed by a Q&A session. I will now hand over the call to Mr. Seth for his opening remarks. Over to you, sir.
Thank you, Harshit. Good afternoon, everyone, and a very warm welcome to all of you present on the call to discuss our financial results for Q2 and H1 FY21. At the outset, I hope all of you and your loved ones are healthy and safe. After a subdued performance in the first quarter, primarily due to the nationwide lockdown, our company witnessed a sharp recovery during the second quarter. This recovery was majorly led by the stellar growth achieved in our consumer B2C segment, which includes revenue from the switchgear, lighting, wire and cables, and non-utility meter categories. Our consumer segment witnessed a robust growth of 33% year-on-year to reach rupees 145 crores in Q2 FY21 as against 109 crores achieved in the corresponding quarter of last year. Excluding the sale of non-utility meters, the consumer segment stood at rupees 134 crores, higher by 26% year-on-year compared to 106 crores in the Q2 of last year. The strong performance by the consumer business was driven by lifting of the lockdown restrictions, revival in the economy and consumer sentiments, ably supported by the company-level initiatives such as expansion of dealer and retail network, refocusing on various customer segments, and offering a wide range of quality products to consumers at various price points. Delivering a robust growth at a time like this validates our business model and our supply chain. Furthermore, it is a testimony to our strong relationship with the channel enjoyed by HPL in the consumer product categories due to our consistent product quality and technology. Coming now to our performance in the metering business, metering operations continued to be disrupted as inspections and dispatches to utilities continued to be subdued even during the second quarter. As a result, revenue of the metering segment stood lower on year-on-year basis at rupees 93 crores in Q2 FY21. However, on a sequential basis, the revenue of the metering segment jumped by more than 2x versus rupees 35 crores in Q1 FY21. We readjusted well to the new reality by moving towards a leaner cost structure by rationalizing our employee costs and other operating overheads. The cost reduction initiatives enabled us to improve our EBITDA margins by 200 basis points year-on-year to 14.9% in Q2 FY21 and keep our operating profitability intact at rupees 34 crores. Our leverage and liquidity profile continues to remain comfortable. We have cleared all the interest and debt installment obligations that were due in H1. To give you an outlook for the second half of the year, at present, we have a robust order book of 335 crores, boosted by smart meter orders, which comprises over a third of the total order book. This ensures us revenue visibility for the near term. Further, looking ahead, we expect the metering segment to perform better in the H2 as dispatches to utilities gradually pick up pace. Meanwhile, in the consumer segment, we expect to continue to see healthy traction in H2 FY21 with the onset of the festive season and pickup in the consumer demand. Looking beyond the short-term challenges in meter segment, we are excited by the opportunities in the smart metering space as both the public and private power distribution companies increasingly shift focus towards installing smart meters to replace conventional meters. We as a company remain fully geared up both in terms of the product technology and capacity to capitalize on the enormous potential that the smart meters will offer going ahead. In fact, to further strengthen our product development capabilities, we have inaugurated a new state-of-the-art R&D center employing a team of 200 engineers exclusively for smart meters, software development, and other future technologies at our Gurugram facility. On the consumer business front, we continue to remain bullish on our long-term growth trajectory, led by product development efforts, network expansion, and effective branding initiatives. On that positive note, I would request the operator to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Purinju Veliat from Equity Intelligence India Private Limited. Please go ahead.
Hello.
Yes, sir.
Hello.
You're audible. You can
I'm audible?
Yes, sir.
Yes, sir. Please.
Yes. Okay. Good morning, everybody. I'm Purinju Veliat from Cochin. I used to listen to the quarterly, this calls many times. But every time we hear the same thing, every quarter call, we talk about 20% growth, 25% growth, and an optimistic note. But if you see, last 10 years, I see these companies declining every year since last 10 years. And I don't know, it's even the stock price or the valuation shows that in 2016, the company came out with the IPO at 202 rupees and at 360 crores collected. And that 360 crores has come down to 50, 60 crores now. In stock price from 202 to 30 rupees. So what is optimistic is only for the family. They are taking 8-10 crores salary every year officially. I don't know otherwise how much. And shareholders' wealth is eroding every year. In 5 years, they managed to destroy wealth from 360 crores to 60 crores. So this is not acceptable. If the management has failed in creating wealth or reinventing in the challenging segments, so that's very sad. How can we take salary like that for the family? 8-10 crores. I think for this kind of a working, management should have 25,000 rupees per month kind of salary. So this is not 1 year, 2 years. This is sustainably like that. So there is no reinventing of the things. Management is very incapable. It is very much proved. So why not just exit so that the investors can create some wealth to some better management?
Okay,
this is a proven thing 10 years. Yes, this is not 1 year or 2 years. Yes, this is only the promoter family benefits and investors go continuously lose money since IPO. Wealth destruction is going on every year in the last 5 years since the IPO. So there is no justification for continuing like this. You should take something. Now company has become almost sick and ready to go to NCLT. And still aap bade baat karte ho. What is it?
Sir, can I answer you there?
Yes.
Okay. Yeah. Thank you for your question. Let me just give you a brief overview. And there are many points. Okay, you have stated it. Suggestions are welcome, and I think that's what these calls are for, so that we also get a feedback on that. Regarding the share pricing, of course, I cannot comment on that. But on the business front, let me just run you through very briefly on the outlook and other things. If you see our last couple of calls, in the last 2 calls, I'm sure you might have heard them. We have been talking on the consumer business growing. And if you see in the last quarter, if you see even our projections for the next 2 to 3 quarters, what we have started giving, we are definitely seeing that growth coming in despite the COVID and the pandemic, what has been going on. And if you see last quarter, 33% growth, even going ahead, we are seeing a double-digit growth. Yeah, Hello. Even going forward, we are seeing a double-digit growth coming into that. Now, in the metering segment, of course, you mentioned on that. 2016 was a year which was, we had two big disruptions. One was, as we did the IPO, within the next 30-40 days, we had the demonetization coming in. So that really brought down the market. It did affect us in a way. And then subsequently, then the GST implementation came in. While this was going on, the metering industry in 2016, if you see the entire, there are official data where the entire industry shrunk by over 30 to 40%, and that is where HPL, being a leading metering player, also we shrunk on that in our sales. But thereafter, we did make a comeback. Now again, what we are seeing is we are on the verge of a new. A very big opportunity coming in. Today, even in our 272 crores of orders, over one-third of them are in smart meters. The inquiry base, what we look at today, are more than even 2,000 or even going up to 3,000 crores. A bulk of them are today on the smart meters, and there are again very few companies which are very well poised to take the opportunity. So in the past, those smart meters, there were a couple of tenders which came in, but if you go through the history, as a company, we were very clear that we will not participate in certain tenders due to their conditions, the payments, what were attached with that. And if you see the majority of orders which were given, even with ESL and others, there have been companies which have been blacklisted. There have been big orders which have been going to companies where not a single meter has been supplied by those people even in the 3 years or 4 years. So the market situation, we need to be very clear. When we look at the industry, I think from a business point of view, we do know our business, we do know our work. The smart meter for this company is a very big opportunity, but how to take it to bring it into a profitability, that is somewhere I think that is best left to the company. We have not participated in tenders knowing the payment situations and others. Today, if you look at the tenders coming out from the same utilities are with much better terms, which are today conducive for companies like us to do business. And that is where we are putting our money today in, that we see that the business will happen in a good way. This is on the metering front. On the consumer front, we have been confident. We are seeing the growth coming in the last quarter as well. Even in going forward, at least in the next 3 quarters, we have already said, even in the last call, that we will see a good business growing forward. I do agree with Parinju sir that yes, in the last couple of years, there has been maybe some part growing, some part not growing. So overall, there has been some stagnancy. But overall, as a company, we are very strong. I don't know, you mentioned about other things. Our debt equity ratio is 0.81. So I don't see where whether they are rumors or they are just probably expression of someone's personal views. But I frankly do not accept those, because one has to go into the figures and go into the things. Regarding the director's salaries and other things, from the lockdown also, there has been a 30% cut. There has been no increase in director's salary from the last 4 years. And I think even the senior management post the lockdown has accepted cuts, which is very relevant when you see the other expenses and even the employee costs coming down. So overall, as a company, we have turned around in the second quarter, and I would say going forward, we definitely see a much better growth coming in, and we are there to see growth coming in both the bigger segments of the company.
Anyway, so making excuses and it's a challenging industry segments, I understand. So if you work in that kind of a thing, you should have professional, capable management. That you do not have it. 3 family members running it has failed. It's very evident. Somebody see last 10 years of your working. Why not appoint a smart CEO who is capable of taking it up? Every company in that segment, consumer and electrical kind of thing, they have created so much wealth. Look at many of those companies, Havels. Take any of them. The way they have created wealth. You destroyed wealth 10 years, while others created wealth. others became 10 times and 20 times, you made the client's money 1/10 from 202 to now 35, maybe 1/5 कर दिया. So this is not 1 quarter, 2 quarter का बात नहीं कर रहा हूँ मैं. You have been a failure. You have to accept that.
Today, if you look at our company, there are 40 to 50 senior professionals from who are running the show. There are 7 factories. They are not run by the family members. Each and every important function, whether it is R&D, whether it is sales, it is everything, right from finance, account, everything are headed by senior people. They are senior people all from the industry and other things. But anyway, I think your suggestion is taken, and definitely one can contemplate on this. We are always open for learning and for improvement. So we'll definitely look at your suggestions, sir.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Viral Shah from Prabhudas Lilladher. Please go ahead.
Hello.
Yes.
Yeah, good afternoon. Yeah, good afternoon, sir. Wishing you all a happy Diwali. To start with,
thank you. Same to you.
Thank you, sir. To start with, sir, you had mentioned that there is a good amount of opportunity which has been coming in metering segment. So could you elaborate more onto that, whether from domestic and international as well are we looking at, or it is purely domestic? And in domestic, what kind of opportunities are we looking at in terms of smart metering division and in terms of working capital as well, because and thirdly on competition in this segment. Thank you.
Sorry, the last part I missed out.
On the competition on the segment in terms of metering.
Sure.
Yeah.
So if you look at the smart meter opportunity, the government has been talking about putting 25 crore smart meters, and that's a huge opportunity what is there. But if you see, this is not just a claim by the government, because internally, because even our team has been involved with the government, with even right from giving the feedbacks on the standards, on how the whole thing has to be laid out. So the government has been very proactive. One has to consider that the overall connections in India are estimated to be about 28 crores connections, household connections. So practically the government is talking about putting in smart meters across the country in the next 3 to 5 years. And I would say this is pretty ambitious target. It is definitely a doable target. But what helps us is that even after the lockdown, the examples what the state has taken in has, like when they look at UP and others, what they have done, and certain learnings what they have got from this, the government is now really going for the smart meters. So when we look at the order inquiry today, if let's say we are seeing over, let's say 1.5 to 2 crores of meter tenders out, a lot of them, even at the state level, are today focusing on the smart meters. So, but we are seeing a transition. So this transition from a normal electronic conventional meter to a smart meter will take some time. We have said that in the last couple of calls as well. So it may take another 3 months, 6 months until the proper, from the conventional they are able to shift to the smart meters. But on the whole, when one looks at a 5 years, 10 years opportunity, it's a huge opportunity. And this opportunity is not only restricted to having the smart meters supplied, but also the subsequent management services which are associated, which normally would go on for about 5 years with that. So that also has certain revenues which a company can look at, a continuous revenues coming in. So from a smart meter point of view, that is very good. Post the lockdown, the government, in fact, the minister and even the government came out very strongly that in times of pandemic, when people are looking at faceless and contactless technologies, smart meter technologies are definitely much better. So I would believe that even in the last budget, a specific funding was given for the smart meters. So overall, this opportunity seems to be there for a longer time and to come in. Also, what is good is that initially when the government started looking at smart meters, we had a lot of companies coming in. The pre-qualifications were pretty open. So a couple of tenders went by where we chose to, what I was just talking in the earlier answer, that we also chose to keep away in certain tenders where we thought that the terms were not conducive for a proper business, for keeping a long term in view, and also on the payment side. So there we have been very selective on that. But today, when we look at the way the tenders and the business is evolving, definitely it appears that in terms of margin, in terms of business, the smart meter opportunity seems to be good. Coming to the second part of your question, where you talked about the working capital, the working capital in metering business is high. There's no doubt in that. The debtor period, in fact, post the lockdown, we have seen certain slow collections happening, but which is now gaining better strength because a lot of utilities which were slow to start off today are seeing the opening happening, because eventually the meters have to be installed at the consumer premises. So that has been slow. So overall the segment has been a little slow starter, but we believe that will come back. But nevertheless, the debtor periods in the metering business are at 6 months. As of now, we would say once the smart meters are coming in, probably the same working capital cycle would be applicable for that until the government really comes out with some different way of funding these. But currently, as of now, the working capital in the smart meters would remain the same. In terms of competition, whenever there is a change in technology, we have seen a lot of new entrants come in. There is some kind of a disruption in the competitive scenario. But as we go forward, we see that to be it gets thinned down and becomes much more focused. Like if you recall, if you go back 10, 15 years, there have been over 40 players in metering, but in the last over a decade, the major competitors have been almost 4 to 5 who have been doing that, and that's been a pretty mature competition, I would say. In terms of in the shorter span of smart meters which have come in, where it's been a learning experience for everybody, we have seen lot of people came in, a couple of Chinese companies have been blacklisted in this. But today, as we see the competitive scenario, again, it seems to be that there are few specific players with the strengths of technology and the complete back-end services, what can happen. So going forward, I would say the competitive scenario will also be much better. Maybe there could be 1 or 2 new entrants which may eventually come in, but I would say looking at the way the business is structured, it will have to be a very effective competitor who would probably be matured enough to understand the eventual costs and realizations of the entire business. So overall, just to sum up my answer, I would say yes, smart meters is a big opportunity. Even the way the overall environment and the ecosystem what has played out in the last 3 years, I would say it has improved much better. So for us today to get into do the smart meter business in a big way, which we of course believe we are very well placed in terms of product, quality, R&D, with the new R&D center opening up now, and with even the commercial terms being much more viable, definitely we would see a much better business coming forth. Yeah.
Okay, fair enough, sir. Thank you so much for that. Sir, you had mentioned in your opening remarks about cost rationalization measures which we had been implemented during the first half of this fiscal. How much of this cost rationalization are sustainable?
Again, your last part was not clear. How much of the cost?
Cost rationalization measures which we had been taking. So basically in terms of reduction cost or whatever we have.
Viral, we couldn't hear you well. Your voice was breaking.
Hello. Am I audible now? Hello.
Yes, you can go ahead.
Yeah. So my question was, you had mentioned in your opening remarks in terms of cost rationalization measures being taken by us. So wanted to have clarity in what portion of that measures are sustainable going forward.
Yes. So just to give you a sense of the cost reduction, if you see in the second quarter, because that was, we had 3 months, it was a full quarter what we had. Although the revenues went down by 16.5%, the employee cost went down by almost 20.5%, and the other expenses, the overheads went down by 23.3%. So if you see, this helped us to improve the EBITDA going up to 14.9%. Now, when we look at these, there are, what this lockdown taught us is that since we have on a zero-based reviewed all our cost structures and even other things, so there are many costs which we don't see it coming back. So there have been, plus there are a lot of overheads which we take like rents and a lot of other things which were happening. We have either reduced them till 31st March or even many of them, things which are not required, we have reorganized them just so that to make sure that we are able to bring down our costs here. I would say going forward, let's say when you look at the employee cost, yes, there has been certain rollbacks from the 1st of October, but even certain rollbacks, what we have, are also linked to the performance incentives. They're performance-linked incentives for all employees, whether they are in sales or even back-end production, going up to everybody, including the directors. So we are coming into a new culture where we are looking at the performance being a key force for the remunerations to happen. So this is one part. So we might find that certain part will be going back there on. When you look at the other expenses, the majority reduction in the other expenses has been on two heads. One is on the traveling and conveyance. The other has been on advertising and business promotion. So as things will open, yes, certain traveling costs will come down, but we don't see, we have realized that we are able to do the same amount of business or even grow over 30% in certain businesses without having much of traveling to be done. So for the near future, a lot of these expenses will not be coming back. Also on advertising and business promotion, we even going up to the third quarter, we would see that to remain low. But eventually, especially because this is more related to the consumer business, so as the business is expected to grow up to double digit maybe in the fourth quarter or in the first quarter next year, yes, we will resume back certain advertising and other things, but maybe not coming back to the levels of pre-COVID level immediately. So we will be much more cautious. I feel a lot of new insights have already come in our cost structures where we feel that maybe some things were not essential. They were happening, but maybe a thing like COVID has brought in certain disruption where we have reviewed and seen that what is relevant going forward, and I think that is what we are doing it.
Thank you so much, sir. Thank you so much, and all the best for future. Thank you. I am done.
Thank you. The next question is from the line of Dhruv M from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you so much. So one question on smart meters. What we understand is in the earlier stage of implementation of smart meters, one issue was that the state governments or the DISCOMs did not have the back-end infra for integrating these smart meters. So based on your ground level understanding, do you think this challenge is now sorted and at least that issue is now resolved, at least across the major states like say Rajasthan, Tamil Nadu, Maharashtra? Is that issue resolved?
No, you must understand that each individual utility has its own billing software, and whenever a smart meter is installed, so there has to be an integration of the head-end software along with the softwares of the utilities. So as a technology and as if you see this process is well tried and tested, and this is possible. But yes, whenever, like in any company, wherever these type of integrations are happening, there are issues on implementation. While this is happening, but it is possible. So, of course, one does require a good support and cooperation from the other side also to enable the integrations happening. But as far as the technologies are concerned, and even so sometimes, before the tenders, there are pre-testing of these type of integrations. So it's possible. I don't think that's a big issue to be there. But yes, when you look at an all India level of rollout, and especially for the first timers, when a new technology is being implemented, which is totally software driven, it needs an uptime of, let's say 100% uptime, and it involves that. Yes, these challenges are there, but they can be sorted out. I think the manpower and the technologies are robust enough to do that.
Yeah. So my question was more on, I understand that these are technology issues and can be easily sorted out. My only point was, are they, what I used to understand was that the states have not invested in the backend itself. So first they will have to invest in the backend, and then the smart meter rollout can happen. Because I got to understand that these are prepaid meters, so it has to be very live-based system that it, remains always 24/7 remains live. So what I was trying to understand, have the majority of the states invested in the backend? Because once they have done, that will lead to a significant ramp up in the ability to now procure meters.
I cannot comment for all the states, but yes, wherever, because it's a learning. As I said earlier, also it's a transition happening. And today, if you see, it's not that every 100% of the states are immediately going for that. But yes, many states are working it. So while the tenders are being framed, once that evaluation is happening, I'm sure people are aware that they also need to have those subsequent costs coming in, because it's a one-time change. It's a change. It's a change of the mindset also. It's a complete cultural change, because eventually post these implementation, one doesn't require the manpower to go and collect the data and other things. So one moves to a manless system of getting in the data. So yes, it's a change. I would believe that the states which are coming out with the tenders, because the tenders are not just it does involve a couple of months of study, evaluation with the vendors, with everybody, and that's how it's coming out. So I guess they are aware of what they need to do, and to eventually make the whole thing go live. Yeah.
Got it. And so secondly was, say for example, a state goes ahead with the backend infra and has done all the backend infra work, and goes with a smart meter, say a smart meter supplier A. Now, in the next tender, is there a compulsion that he will have to stick, because of the technology issues, he will have to stick with A, or he can, in the tender process, there is a new supplier which can come in and can integrate it easily?
To the best of my knowledge, I think they can go for multiple vendors, because most of the smart meters are anyway based on the international or even the specifications and the BIS approved in India. So however number of meter manufacturers you'll have, the specifications typically they have to fall within the same specifications. Although people might use a different route of the software and other things, but in terms of the integration, I would say that's a flexible issue. Yeah.
Okay.
So that's what I believe that earlier, because this has been discussed a couple of times, because people, the utilities wanted the flexibility that they should be able to change in future, or even while they are implementing with different vendors, and not to be stuck with one vendor proprietary software or something. So I would say I think that has been well thought of, and rightly so, because eventually the government has to have its own platform where various vendors can integrate here.
Got it. So basically the idea is have a common platform, and say any vendors can integrate to that common platform. It will not be a restrictive platform.
Yes.
That is what the approach. Okay. Got it. Got it. That's helpful. So one last small question is, we have seen a decent improvement in your RM gross margins. Is it because of some one-off benefits that we are getting, because the raw material prices probably would be lower given the situation, or part of this can sustain? So the gross margin is about 37.
Yeah, 37% from 34. So if you see that, it's more because our material consumption is around 62.5% or so. Mainly it is more on the product mix, I would say, that we have been able to do that. And as such, if you see last quarter, the push on commodity costs and other things was not as high. Of course, like now in post-October, we are seeing the copper increase in certain, which affects certain items. Of course, but these are all on the trade products where the prices get eventually passed on. But otherwise, as such, in that quarter, we have not seen any big pressure on the commodities or the material costs. Yeah.
Got it, sir. That's helpful. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rishit Shah from Dhanki Securities Private Limited. Please go ahead.
Yeah, good afternoon, sir. So just another question on the smart meter side. So you said, sir, there are currently around 1.5 to 2 crore meter tenders out there. So can you just expand on what are the current tenders or the coming tenders in the next 3 to 6 months?
Yeah, as I said, there are almost over 2 crore number of meter tenders which are out. In terms of value, they can anywhere be around 2,000 or 2,500 crores. So these are covering various utilities. So it's not one or two big tenders are there, but these are covering a lot of state level utility tenders as well as certain central utility tenders. Central is more the ESL tenders. So it's very well spread out. So it does shows that the inquiry and the level of interest are high from the utilities in procuring the meters. So of course, as we are in the transition stage, not all meters are from the smart meters, but yes, there are a couple of states which have come out with the smart meter tenders, and some of them probably are still on the conventional type of meters, but we believe going forward, maybe in a few months or by next year, they will probably also start procuring the smart meters. As I said earlier, I just like to add that to shift for any utility to study and then evaluate the smart meters requires a couple of months for them to do, because they need to work on, understand the technologies, understand the feasibility in which may depend from state to state. So the circumstances or the situations may be a little different from state to state. So every state, rightly so, is evaluating the smart meters. And of course, the central government is also pushing in a bigger way. So definitely it makes sense for them to evaluate those technologies and move forward. Yeah.
Okay. Just to carry forward from that, so what would be so within these tenders, so what would be the tenders that we would be bidding for? Yeah.
So we as a large company, we bid for practically every tender which comes out, because in terms of pre-qualification, in terms of technology adoption, I don't think there is any restrictive. We have even in the past we have seen any restriction coming out on that whether we need to participate until our team feels that yes, we maybe the certain payment terms or certain clauses are such which are not conducive for business. Only on those points we may not participate, but otherwise from a general demand point of view or looking at it, we participate almost in 100% of the tenders. Yeah.
Right. And just a ballpark figure of what kind of success rate do we have in winning these bids? If there is an average ballpark figure that you can give?
I would say based on our estimation and even certain last two reports which have come out from credible market sources, we probably have a market share of maybe 22 to 24%. So I would say even looking at the way these tenders are there, we should be very confident to retain our market share. So that's what we will strive for, and I'm sure our teams are working on that.
Okay. And the last question, so what will be the current capacity utilization in the metering business?
So in the metering business, it should be about 60% right now.
Okay, great. Understood. Thank you.
Thank you.
Thank you. The next question is from the line of Mandish Shah from Money Control Research. Please go ahead.
Yeah, thank you for an opportunity. Good afternoon to all of you. My first question is whether the
Sorry
current
to
EBITDA.
interrupt. Mr. Shah, I would request you to please speak a little louder.
Yeah. Is this okay?
Yes, sir.
Yeah. Thank you. Is the current EBITDA margin sustainable going forward for the second half?
No, sorry, could you repeat that, please?
Yeah. My question is whether the current EBITDA margins of 15%, which you have reported for Q2, is it sustainable for the second half going forward?
So we see some, in the long term, maybe it will come down a little bit, but because there will be some rollback on the employee cost for post-October. Maybe some part is also contributed by the product mix. But generally, we would see maybe earlier we've been almost at 12% plus. But I would say going forward, maybe we are better off than that. But maybe at 15%, it may not be sustainable. But it may fall back to some extent.
How many total number of authorized dealers you have at present? And do you run any incentive program for the same as well?
Yes, I think today if you look at the dealers, we probably have about 900 active dealers. At one time, I've said it earlier also, we have been since the last 2 years working to actually reorganize our dealer distribution network. So at one time we had actively almost about 2,000 dealers, but some of them were much smaller. They were in this thing. So we have consolidated a lot of our dealers, and today we have about active, I can say about 800, 900 dealers who are active. Yes, we run a good amount of schemes which are monthly, quarterly, and a lot of incentive programs, and also even annual schemes just to bind them. So as we go forward, even in the next 2 years, 3 years, we see that we will be probably the dealer network will remain at this level only. Maybe we will reorganize maybe 100, 200 more going down. But in bigger areas, we are looking to appoint better quality dealers, better dealers with better financial strength. So that is continuously happening. In fact, even after the lockdown, we have seen a lot of good distributors who have joined us in many underrepresented areas, and so we are seeing a good uptick in the sales, which are reflected in the numbers. What is also of a primary focus from us is that although the dealers level will probably remain stagnant, although there will be some churning in, but the retail network is expected to grow in a bigger way, and that is where our focus it will largely remain going forward in the next 2 to 3 years. So we will see a lot of retailers being expanded under the same dealers, or a lot of new distributors being added who are already having a retail network of 300 or 500 retailers below them, where we are able to convert them to our products. So that is where the maximum focus is, and that is where we have seen the maximum traction in the last 4 to 5 months, where we have seen a high double-digit growth happening. So that is where our focus will remain going forward.
Okay. So my third question is, what is your expectation regarding what is the consumer demand after the post of festive season? You can throw some light on that.
Sir, your voice is not clear. Can you just speak in the system?
What is your expectation regarding the consumer demand for post of festive period? If you can throw some light or some visibility.
Yeah, I would largely remain quite optimistic on that because initially when we opened out in the mid of May, so May, June we started seeing the demand going up. So initially it was felt that it's a pent-up demand and probably it will not go on. But last 7 months, including even October, we are seeing the consumer side picking up into a high or mid-level double-digit growth. So, of course, post the festive season, especially if you look at the lighting segment, which is also dependent on the festive season. So, there may be certain drop in that, but as a company, we would remain optimistic. We will still keep pushing our teams and the markets to make sure that we are able to still sustain those growth. So broadly, if you ask my opinion, I would say yes, we will remain optimistic, and we expect these growths, at least in the consumer segment, in the last quarter we have seen it, and at least in the next 3 or 4 quarters, we will see the kind of growth happening here.
Yeah, thank you. I'm done with my questions.
Yeah, thank you.
Thank you. The next question is from the line of Ronak Kataria from Growth Financial Solutions. Please go ahead.
Good afternoon, sir. I have a couple of questions. Firstly, as per the investor presentation, I have witnessed that exports have grown to around 10.5 crores in Q2 FY21. So, and it contributes around 5% to the top line. So, just wanted to ask that which are the primary products, main products we export, and which markets, and what is the outlook on export? Second question is, when do we see our meter business reaching pre-COVID level, and how do you foresee the growth prospects for the meter business going forward?
Yeah, sure. So, we have seen a good growth in the first half in the meter segment. Of course, we've been a little late starters on the exports, but overall the growth is now picking up. In fact, post the lockdown, if you look at the supplies to various countries, we have done almost 34 countries we have supplied post the lockdown. Overall, we have been exporting to about 42 countries, and so the activity in exports has picked up. Primarily, the main products which have been focused are the switchgear products. So almost, I would say, a bulk of the products what we export have been switchgear. In fact, that has been happening for a couple of years. This year, we have also started focusing on wire cable, on the lighting products, and to some extent on the metering also. But metering is again the non-utility meters. So overall, we expect, although our base is very small, but this year we expect to almost double our export sales this year. And the trend in the first 7 months is just going towards that. We are almost doubling up, and I would say we would continue to do that. Now, going forward, one must understand that right now the travel for export purposes is nil. Nobody can move out. Even the international exhibition, because that is a big source of getting in new customers, that has not happened, in the last almost 7 to 8 months. And I don't see that happening almost for the entire year. So although I would personally like to be a little optimistic on exports, but one has to keep in mind that if the travel restrictions do not open out, maybe even on post March or going forward, or even if no exhibitions are happening and nothing is happening, so that in a way could affect the growth of exports going forward. But up to March, we feel the momentum is right. Our focus is also right, and I would say we will double up the exports this year. Yeah.
Okay. Good point.
Thank you. The next question is from the line of Devendra Pandey from DP Financial Advisory Services. Please go ahead.
Hi, good afternoon, and congratulations on good recovery in this current quarter. So, my first question would be on the additional OPEX outlay because of this new smart meter R&D facility.
Not much required. No, not much. As we have opened a good a new R&D center, so it's fully equipped for doing a lot of software development. But we have been doing R&D earlier also, but they have been in I would say in a much more distributed way. So now we have consolidated our resources under one roof, we would believe that the OpEx as such is not going to happen, but what the positive thing is going to be that there will be a better management of our various projects. Much more efficiency will come in while we are working under a single roof, and even utilization of a lot of resources. The only cost which will go up will be on the manpower of the R&D. So we've got recently a new R&D head which has joined in. A well experienced person from especially on the smart metering side, but also we have built up a lot of new senior staff and even project leaders who have come in the R&D. So that is the cost which will probably go up as we go forward. But I would say that will be a self-paying thing because the kind of business what we're expecting in smart meters, I'm sure that will look after the added costs on the R&D expenses.
Okay. And the finance cost on a quarter-and-quarter basis has gone up. So can you give us some sense on what would the finance cost would be going forward? And with many government schemes coming in, are we planning to restructure our debt?
Yeah. So if you see the net debt has gone up to 526 crores as against 504 crores from March. So that's an increase of about 22 crores. But out of that, about 14 crores have gone into paying the creditors because that's a net extra payout to the creditors, more because of the liquidity pressures what they have been experiencing at their end. So that is how the finance cost has remained at the same levels. So going forward, the additional loans taken based on the COVID or due to the COVID loans, I think they would eventually get paid back, and we see ourselves coming back to at least the March levels by end of the year.
Okay, and my last question would be on the capacity utilization for each segment. So can you give us the numbers for each segment?
Yeah, like I said, meter is around 60%, but the other consumer parts are at a much better level, maybe around 70-75%. So even if you see at the pre-COVID levels, we were at that time around 70% levels. At that time. So in our switch gears, in our lighting and wire and cable, we are currently above the pre-COVID levels, and you can see even the growth numbers. So there our capacity utilizations are better, and they have been growing month on month. So that has been good. But we just need to see post the festive season how the lighting pans out. But overall, as I said, we are quite optimistic at least in March and even going beyond, that we would see a good growth happening in our capacity utilization as well as the sales.
Sure. Thanks. I will join the queue and I will come back if I have any further questions. Thanks.
Thank you.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Good afternoon, sir, and thank you for giving me the opportunity. Sir, you mentioned the debt at 525 crores, sir? Hello?
Yeah, 526.
526. And sir, so could you split up between what is our long-term debt and the working capital requirement and the cost of funds?
Long-term debt is around for 66 crore.
Okay.
And remaining is working capital loan, that is around 500 crore. And on net basis it is 460 crore.
Net basis is 460 crore.
Yeah, 460 crores on net basis.
Okay.
And the average cost of fund is around 9.5% or so. 9.5%.
Right. It is the nature of the business, sir, that accounts for these high levels of debt, and this gets rationalized only when the utilization levels improve, or with the improvement in utilization levels, the absolute number in the debt will also increase?
No, that won't increase because there is some slowdown in the recoverables due to this COVID situation, and coupled with the delayed inspections by the electricity utilities, and further there was payout of the creditors. That resulted in increase in borrowing.
So under normal circumstances, sir, going forward 6 months down the line, what should be what should be the ideal number, sir? As a percentage of sales, what should be your interest cost, sir?
Interest cost should be around 12 crore a quarter.
12?
Yeah.
Right.
Yeah, but one has to understand the nature of business, especially on the from the utilities. The data period is longer, so that
not 12, it is around 15 to 16 crore per quarter.
Okay. Right.
On consolidated basis.
Correct. Sir, if we take this smart meter concept, sir, that is gaining steam, sir, it is totally the ecosystem is totally dependent on the power utilities. A consumer cannot opt for the ecosystem for smart meter until and unless the power utility gets that into implementation, and for a system for a consumer, are there options for maintaining both the traditional as well as the smart metering at the same time, or when there will be a switch, there has to be the entire system? Say a service provider, say Calcutta Electric Supply, opts for smart metering. So can they continue with the conventional as well as the smart metering parallelly, or they have to totally shift into?
Yeah. So they can continue with it, because even shifting to the smart meter, it's not that the whole state can convert at one time. It's practically impossible to do that. So typically this will happen in few areas, few towns, let's say few colonies, and that is how the network will keep getting expanded. So even while the rollout is happening, so suppose theoretically we say that if the rollout is going to take 3 years or 5 years, so there will be states who will, in some areas, continue to procure the conventional meters until the whole conventional meters are phased out, because one cannot stop the activity of metering, and so that's how it is. So, but yes, in an area the viability will come when one is going for a complete area. So, but that also will take time. So traditionally the entire country is right now on the conventional meter. So as and when the changes are happening, they will probably happen for those areas, and then those areas will eventually get expanded here.
And so then what is the penetration level, sir, as of now?
Right now it is very less. Right now it's very less. So I think the whole market is in front of us. The whole opportunity is very big in front of us. So there have been certain states have done a couple of lakh meters, but right now it is still very small. It's probably, I would say, just maybe about 1-2%, but maybe not even that. So right now the whole market is open, but the important thing, what right from the first answer, what I was trying to say is that in the last 3 to 4 years, although there has been a lot of talk on that, there has been a lot of understanding and study by everybody. So the approach what was happening initially and the approach what is happening today, there is a lot of shift in that. The pre-qualifications are in place, the standards are in place, the BIS is in place. So I would say now the overall ecosystem is much better to approach this opportunity, which will be much more viable and better for everybody, for all the stakeholders, whether it's the consumer, the utility, the installation partners, as well as the meter manufacturers.
But sir, if you take just to dwell on it, what is the installed base as of now? Just if you are telling that 1 to 2%.
I would say 28. As far as I understand, it's about 28 crore households which are currently being metered. So that is probably the market size, but that is also growing. So one can easily say maybe in a year, maybe 3 to 5% growth is there.
I'm looking for your installed base, sir. How many meters have we sold smart metering?
It's very. We are talking about a couple of lakh meters, but it is still very less right now. Although We have over 100 and some crores of orders of smart meters, and a lot of them where we feel that we expect the business to be coming in. But yes, right now the install base is very less.
And what have been the absolute numbers, sir, for last financial year in terms of the smart meters we have sold?
No, I would say it is negligible. I can probably through the IR I can get the exact figure, but not that something which I have it readily with me. So I can share it later.
Okay. No, sir. If we take your revenue of say 460 crore of metering, that includes the smart metering component only, or something more goes into it? That
includes the smart meter component. So we can probably share it one-on-one. I don't have the figures ready with me right now.
Okay. And lastly, point on this, lightning in the wire cable segment, sir. What kind of presence, sir, are we looking forward, especially in this highly populated, if I can use the term, wire and cable segment? Where are we standing, and is it the brand presence only for which we are doing, and is it the job work part we do exactly, or it is the totally manufacturing one? Because the margins are very poor there.
No, we have we have a complete manufacturing unit, in fact, fully backward integrated, and the best in-class machines, which are from Niehoff, Germany. So we have those machines which we use to manufacture. So in terms of our manufacturing capacity, in terms of our factory and everything, we are very well placed. Yes, our focus in the last 3 years has not been in too much on the wiring, but I think we said this last year also that we will be refocusing on this, and rightly so. If you look at our quarterly numbers, even the past 2 quarters and even going forward, we would see a very high double-digit growth coming into the wire and cable. But yes, right now our market share is less. But as we come up to one level, then I'm sure our focus on market share will be higher. Lighting is different. Lighting, we are consistent performers. Our penetration in lighting is much better right now. And we are we have heavily invested into the brand building, mainly in the lighting, by doing a couple of IPLs, by doing a lot of other spending. I think post this year, or probably by the fourth quarter, we will again resume the spend on advertising and publicity. But nevertheless, our lighting business has been growing consistently, and the network has been expanding. So there, I would say we are definitely among the leading players in the lighting, and as we go forward, we have bigger plans to be a very strong market dominant player in the lighting, in the trade lighting part, definitely.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Harshit Kapadia for closing comments.
Thank you. We would like to thank Mr. Gautam Seth for giving us an opportunity to host this call. We also thank all the investors and the analysts for joining for this call. Any closing remark, Gautam sir, that you want to give?
I would like to thank everyone, and although it's very difficult to predict the trajectory of the COVID-19 and the uncertainties which we have seen around, but operationally speaking, I would say the worst is behind us. We are witnessing certain encouraging trends in our business, especially in the smart meters and the consumer segment. So given this backdrop, we believe that the second half of the financial year would be much better than the first. On the whole, we are confident of emerging stronger from this challenging phase and creating a sustainable value for our shareholders. I would like to thank all of you for joining us on this call, and we value your feedback and suggestions as well. Please reach out to Dickinson World or us directly should you have any further queries. So I wish you all a happy and a safe festive season. We can now close the call.